What is up, everybody? Steve here. I hope you're doing well. Is predatory lending coming back? I believe so, but it's coming back in a different type of form. Right now, mortgage companies, banks, lending institutions, they are struggling to stay in business. They're doing mass layoffs. They're doing any and everything to cut expenses. And unfortunately, I believe that they're doing some not so good things for people in the future based on their lending activities. Is it predatory lending? I don't know. You guys can make the decision, but we're seeing Bank of America doing basically no money out of pocket, no minimum credit scores to get into properties. You're seeing companies push HELOC loans to people with these teaser rates where they're adjustable rates, and if people get into a shitty situation, unfortunately, those rates will adjust higher over time, and people will have to pay more money in interest on that second lien on their property, which if they fall into bad situations like a job loss, it could be worse for them. And I want to talk about an article pertaining to Rocket Mortgage today, but before we get into it, I want to talk about where we're headed. I believe we're headed towards some bad times. And I was talking to another investor, a buddy of mine, and he said that he thinks things are going to be devastating. And this guy, he's pretty seasoned. He's a long-time investor. He's been around the block. He owns multiple companies. He sees what's going on, and he has multiple companies within the real estate industry. And I was like, well, why are you making a comment like that? Why would you say that? And obviously, I just want to hear from him, get his take on things. And basically, I was like, well, what do you think is going to be the biggest driver for our economy in a recessionary or maybe even a depressionary period? Well, what's going to be the biggest driver besides what we know is inflation, because it's already here? And he said one word: unemployment. And, talking more about it, sharing ideas and experiences and everything that we're seeing right now, there's still a lot of money in the system and there's still a lot of companies that still have a lot of money on their books. They're slowly doing layoffs in some situations. Other companies are doing mass layoffs. But as time progresses and the cost of everything continues, because inflation, I think, is here to stay for a bit. And as things get more expensive, you're going to see people just spend less. And there's been multiple studies, multiple surveys out there in terms of what people are doing. Are they spending less? Are they taking less vacations? Are they driving less? All these things. And the number one thing that trumps everything is spending less. So if people are spending less, if they're spending less on vacations, they're spending less on going out, they're spending less on food, they're spending less on just buying things that they would want instead of need, that has a trickle effect into multiple businesses. So if other businesses are not receiving that income from people buying their product, they're buying their widgets, buying whatever it is, then we're going to start seeing layoffs in other sectors. And I think, unfortunately, a lot of people are not going to be prepared for this. Unlike you guys who've been following this channel, I'm just trying to get people prepared for worst case scenario. And I think bottom line, it doesn't hurt to be prepared. It doesn't hurt to be prepared and say, you know what? I'm going to get rid of these liabilities. I'm going to get rid of this car payment. I'm going to get rid of this boat. I'm going to get rid of all this stuff in my house that I don't need. Maybe I'm going to consider downsizing. Maybe I'm going to rent out and house hack part of my house. Maybe I'm going to start a side hustle and have additional money coming in. And I'm just going to stack that money for a rainy day. These are all things that I think people should be doing, should be preparing, because I think my guy is right. I think we're going to see a lot of layoffs, a lot of hardship. And when a layoff happens, unfortunately, I can remember back, and this is probably when I was like 16-ish. This is before I got a job painting. I was painting commercial buildings. And it was hard to find employment. And this is up in New Jersey. At that time, it was hard to find employment. And then even when I was in college around 99, 2000, it was hard to find a job even then. It wasn't like it was a different time, and I was calling different places, walking in different places, trying to find employment, and employment was difficult. And I think that literally over the last 10 years, people haven't felt that. They haven't felt the pain of limited jobs available for mass amounts of people. And I think that over the last 10 years, we've just seen money being put into the system, especially over the last 2 years. And it basically ballooned out all of these companies for growth. And all these companies needed help. They needed employees. They needed to bring people in to satisfy demand. And unfortunately, the demand is going to wean off as inflation continues to stay. And I think we're going to still have deflation or inflation for a while, maybe even lead into deflation. Unfortunately, a lot of these companies are going to do layoffs, and if you're in a company where you think everything is fine, maybe it's not. Maybe it's time to prepare some. So all these banking institutions that are coming out with all these creative ways to generate more loans, it's self-fulfilling for them. It's for them. They're not really looking out for the borrower. They're not looking out for the homeowner. As much as people are pushing home ownership is the American dream, or whatever country that you guys are from, to me it's a false sense of security. It could be devastating. I've seen it in the last real estate crash, and that dream that's promoted out there was a bunch of bullshit. And we're seeing the same kind of dream put out now because of their desire to create more loans, because they want to stay in business. If they don't create new loans and they don't create second liens like HELOCs against properties, they don't make money. And if it's a Fannie Mae, Freddie Mac backed loan, they're going to sell those mortgages off so that they can continue making more and more loans. So they're coming up with any and every creative way to still stay legal based on Frank Dodd Act and other laws in place, to stay legal and still basically get people into loans. Now, I'm going to go through this and then give my final thoughts on it as well. And, I appreciate you guys chiming in the comments as well on what you guys think is going on and your opinions on it. It goes on to say, Rocket Mortgage and its wholesale arm, Rocket Pro TPO, will reduce home buyers' monthly mortgage payments by 1 full percentage point for the first year of their loan. All right, before we go further into this is like saying going to your kid and you're going to your mother and you're like, Mom, can I have $10 to buy this toy? And she goes, where's your money? Where's your allowance money? And I go, look, I spent it on candy or whatever. And she goes, well, you can't afford it. And then you go to your dad and you go, hey, Dad, can I get $10 to buy this toy? And he's like, yeah, sure. Boom. What did your dad do? He just enabled you. He just enabled you for failure monetarily in your mindset. I think this is kind of comparable where, a lender is saying, here's a teaser. Look, get into this. Your mortgage payment for the first year is going to be much lower. And then, bam, 12 months later, that thing's going to jump up. This is called the Inflation Buster Program. Rocket aims to give buyers a reprieve to combat high inflation and affordability challenges, the company said in a statement Friday. For Mortgage Pro TPO, home sellers or real estate agents will be funding the program similar to a buy-down program. That's hilarious. So I know real estate agents are freaking struggling right now. So now real estate agents are likely going to be on the hook to actually buy down people's mortgages in their first year. That's funny. Actually, it's not so funny, but there's a lot of struggling real estate agents. By the way, I did another video on my prediction of over 400,000 real estate agents will be going out of the business during this time frame. It's already happening, and I'm seeing it here locally as well. United Wholesale Mortgage announced that its temporary rate buy down fueled by seller concessions would reduce borrowers' interest rate by up to 2% for the first 2 years of a mortgage. Obviously, Rocket Mortgage is trying to compete with United Wholesale Mortgage. United Wholesale Mortgage got more creative early on, so Rocket Mortgage is trying to do the same and trying to keep up. Rocket said that a home buyer with a $400,000 30-year fixed mortgage with 5.75% interest would generally pay $2,334 in principal and interest. By the way, it's not including taxes or insurance. Through its Inflation Buster program, the monthly payment would drop by more than 10% to about $2,086, which would save the borrower a total of $2,972 in the first year of their loan, Rocket said. I know it doesn't sound like a lot. What are we talking? Basically $220 a month, but that is a lot. Now, I don't know, and I didn't read enough into it that hopefully they're not writing and underwriting loans taking into consideration borrowers' debt to income based on that first year. I hope that's not what's happening. I hope they're underwriting of after that first year, because if they're writing it just on that first year, then we're going to see a lot more people in trouble. Unfortunately, right now, there's not you guys, because I know you guys have been watching for a while and I really appreciate it. But there's a lot of people out there that are not paying attention to what's going on in the economy or housing. People are feeling inflation, but there's still a lot of this shit that's out there that's pushing people and prodding people along to go ahead and take out high interest rate mortgage, relatively high compared to values. So you got high interest rate mortgages with really high valuations at the peak of a housing bubble. And unfortunately, this is just going to devastate a lot of homeowners that are going to be buying right now in today's day. And we got to be very cautious and careful about potential unemployment and mass unemployment coming up. I think it's coming, and we'll see. Anyway, let me know your thoughts below. Do you think that this is bordering the lines of predatory lending? If so, let me know. If you don't think so, let me know as well in the comments below. As always, I appreciate you guys being here with me today. Thanks a lot.